Hello traders, it is Thursday, January 2nd. We are after the market close. I thought I'd do a really quick video, kind of recap what happened in the market today and also show you some really good bullish put spreads that I think might be worth considering here. So we had the first day of the year start off with a bang. We gapped higher early in the day. Didn't really know if that gap was going to fill in or if the market was going to be able to continue to move higher. I'm going to go into a 5-minute chart. I just will say that on a longer term basis, on a swing trading basis, I'm really looking for a pullback in here somewhere. I'm not long overnight. I don't want to be swing trading from the long side. I think we're going to see some profit taking somewhere in the course of the next week or two. That dip is going to provide us with a buying opportunity, so I'm keeping my powder dry overnight, really focusing on day trading. When we get that pullback, I'm going to be looking to sell out of the money bullish put spread. So for those of you who are a little bit more aggressive right now, like the market setup, I'm going to show you some bullish put spreads that make sense. So let's go into the 5-minute chart very quickly because I want to show you an indicator that I use to trade the S&P 500. This is a proprietary indicator that I've worked many years on to develop, and I showed a particular setup that's very, very useful to us in the chat room today. And for the most part, what we're looking for on the 1OP indicator is when you get these big spikes like this and these crosses, that would be very, very bearish. When you get a big trough in the indicator and a cross back above, that's an indication that the market is poised to move higher, poised to reverse. Very, very reliable indicator. Love it for day trading. There's something that is called a bullish divergence or a bearish divergence, and I've got a couple of examples that I can show you. That's why I want to highlight them very quickly. Again, this is the only indicator that I use to trade the S&P futures. Here you can see how we had a spike in the 1OP indicator and it gradually dropped. During that time, you can see how the market compressed, compressed, compressed at a time when it would normally be going, the market would normally be going down because the indicator is going down. It didn't. It treaded water. When we have these instances, it's very, very bullish. And I'm going to show you another setup that we were able to capitalize on in the chat room in just a moment. You can see this bullish cross right here. Boy, was that a good one. Zoom. That was the last trading day of the year. This morning we opened much higher. And during the early video, I showed you 1, 2, 3 tails above body. That is a sign of resistance. And it was very likely that we were going to be heading lower. And as soon as I saw this big red bar right here, I didn't hesitate to get short because we were starting to take out that opening price right there. And I had a bearish 1OP indicator. That turned out to be a really nice trade. Right out of the gate, I bought some SPY puts, made 50% on them. Could have made a little bit more on them, but I was happy with that profit, exited the trade. So what happened next? Long tails under body, 1, 2, 3, 4, 5. We knew we were going to get a bounce. That's why I took profits on the put position. Got a nice little bounce in the market, but it didn't last long, and we got another nice little drop, big red candle. Now we've got our second long tail under body, another test of that low with a bullish hammer. This was a signal that we should be long. So again, I didn't know how strong the market would be or if we would try and fill in this gap from the early price action, couple of long red bars in there. It looked like we might have a chance to go lower. So I waited. I didn't do anything with that information. The market really was pretty quiet, pretty flat for most of the day, so we didn't do much throughout the course of the middle of the day. I had a couple of nice shorts that I put on, TGT, OLLI. Those turned out to be really nice shorts. I did buy Disney, made money on that, made money on Wynn Resorts. So did some stock trades through the course of the day. And then later in the day, we did have a little bit of a bullish cross, but it wasn't out of a deep trough. So I didn't pay too much attention to it. Market was really, really quiet in here, but that ended up being a very nice buy signal. So you've got this downward sloping trend line right through there. You get a breakout above that downward sloping trend line, and you've got your positive 1OP indicator. That should have been a good entry point for us. But a couple of long green bars, if you weren't long going into it, you missed it because boom, the market moved up and then it just sat there for another half hour. Boom, moved up and then it just sat there for a half an hour. This one right here was very, very telling. And I pointed this out in the chat room. I said, folks, look, we've got a compression right here, and we have the 1OP indicator dropping, dropping, dropping. Well, as soon as we came out of that compression, we started to break out to the high of the day. I did buy the SPY January 03 325 calls, paid 29 cents for them, sold them for 40 cents on this last move of the day. Could start to see this cross coming in. We had a new high for the day. Looked like we were going to finish higher. We did. That was a nice 33% winner. So on a day trading basis, right now, I can't tell you right out of the gate what the market's going to be doing, but we did have some signs that we would see some selling. But as soon as I saw these formations right here with the tails under body, I knew we were going to bounce. As soon as we had this, I was pretty confident that this would be the low of the day and we were not going to fill any more than that. So it took until later in the day until I was able to get back in and get long. I'm trying to keep it pretty light right now. We're in holiday trading mode still. Probably will be tomorrow, and then the volume should come back. We got a lot of economic releases next week. We've got earnings season coming up in 2 weeks, so we should see the volume gradually increase. I don't think we're going to see robust volume and robust price action until we get a market decline, though. Unfortunately, I think we could just inch higher, which makes day trading tough. It is good for swing trading, though. That's why I'm going to be showing you those bullish put spreads. This 1OP indicator is fantastic. If you like to day trade the S&P 500 futures, you really should try our research. And if you like what you see in the research room when I'm trading the futures, you should get Option Stalker and take the 1-month trial. Then you'll really, really get a feel for how accurate it is. So let's take a look at some bullish put spreads. Okay, I've got some stocks, and I'm particularly interested in stocks that are not surging higher. They've put in a low and they're starting to show signs of support. I'm going to take this 1OP indicator off. Again, I use it primarily for S&P futures, and I'm going to reduce the volume here so that we can see this better. So on Boeing, you've got 1, 2, 3 tests of the support area right here. You've got some long tails under body. You've got the stock today really trying to bounce. You have this very steep downward sloping trend line that's been violated. I don't know if the stock immediately bounces back, but I do feel that this 324 level would be fairly safe. So I'd be looking to sell a 324, maybe a 320 put spread. Let's right click, let's bring up the option chain, see where the options are trading. Go into Boeing here, and we'll probably need to go out to January 17s, which are 2 weeks out. We can hover over the E, and we can see that earnings are not going to be released until the 29th of January. So just go to the last bar of the chart. Very, very handy, especially when I'm selling bullish put spreads, because I want that put spread to expire before the earnings. So we've got a nice opportunity to sell the January 17. So let's go in and take a look at those strike prices and see what we've got. So the 324 strike price is really what I'm most interested in. So let's see if we can get a decent credit down there. So we'd have to go to the 322.50s, or we'd have to go to the 325s. Now the stock has been fairly weak, so we'd probably be best off going down to the 22.50s. And off the screen, if I click the bid here and I click the ask there, we can see what the credit is, and it's currently a 38-cent bid offered at 69 cents. That spread probably widened out a little bit near the close. They widened out the bid-ask spread. So if you were to go in here, I'd like to get at least 50 cents for this spread. When I have a 2.5 point difference in the strike prices and I get a 50-cent credit, that means that if that spread is successful, I will make a 25% return over the course of 2 weeks. That 22.50 price level puts us below this low right here. You can see the low is 323.32. So this low would have to be violated in order for that spread to be in trouble. I think that that low is going to hold. We've seen support right there. We've seen support right there. So I like that spread. That's a bullish put spread, I would suggest. So first one on the list was Boeing. Let's go to the next one. And let's take a look at Disney. I really like Disney in here. I think that's going to be a nice bullish put spread. Well, why do you like it? Well, we're above the major moving averages, but we're going to put those up very quickly. I always suggest having these up. Sometimes I take them down just to make the charts a little easier to see. We've got a big horizontal support level that runs right through this 144 level. That's where the stock found support. Today you can see a long green candle closing on its high. That also takes out this bearish downward sloping trend line right here. Okay, so we've got really nice support here at the 144, 145 price level, and we've got this nice little breakout right here. So let's bring up the option chain, right click, trade options, let Disney load. Again, we'll probably have to go out to Jan 17. Going to hover over that E. You can see February 4th is when the earnings release is. Going to click on January 17th. If I want to narrow the strike prices, I can go to maybe 5 strike prices and still be able to capture that. So we're looking at that 145 price level. The red dotted line is 1 standard deviation. The blue dotted line is 2 standard deviations. So that also is nice for credit spreaders. And we can see here at the, we've got to go a little bit farther out though than that 145 strike price. So we'll go to all strikes here so that we can see all of them. And then we'll be able to take a little better look. So 143s and 142s. I'm going to click on that bid. Going to click on that ask. You've got $1 between the strike prices right here, and you can see we're 9-cent bid offered at 17 cents, so not getting quite the credit that we would like. If I want to, I can very easily in the option chain click down on this and just drag it to the next strike, and you see that the credit will change, and I could do the same with this leg. So let's see what we can get for the 144, 143 bullish put spread. It's 14 cents bid offered at 23 cents. Because there's $1 between the strike prices, I'd like to get at least 20 cents for that. $1 between the strike prices less the 20-cent credit means I have to put up 80 cents in margin. That's also my maximum risk on the position. 20 cents divided by 80 cents is a 25% return. I like that spread, and I feel that this downward sloping trend line will probably be preserved as well, which is that opening price right there, which was 145.29. So at the 144 strike price, I feel very, very comfortable with it. If that 144 strike price is taken out, then you need to buy back the spread, take your lumps, move on to the next trade. I like Disney. I think that sets up really, really well. SBUX, another one that I like. You can see how it's been riding this 100-day moving average. So what do we have on a longer term basis? We got 1 test, 2 test, 200-day moving average holds. We have horizontal resistance right here. You can see that was previously resistance, resistance, resistance. Now that we're through, it becomes support, and that support held right there at the 87.50 level. Now to get a decent credit on this stock, which does not move a lot, we're probably going to have to lean on that 100-day moving average and look at strike prices that are around that $88 level. So let's bring up the option chains and see what we've got. So we'll go out to January 17th again. First, we're going to check the earnings date. Look, 123. So we've got an opportunity for these options to expire before the earnings announcement. And we're going to go right at that strike price and see what we've got available to us. And it looks like we've got to go with maybe, well, we could go with a 88, 87.50. Let me check that 200-day moving average. Excuse me, 100-day moving average. It's at 88.21. So I'd like to key off of that level if I can. So if we sell the 88 puts, I'll click on that bid. I'll click on the ask. We've got a 50-cent difference in the strike prices. So I need to bring in a dime for this. That's going to give me my 25% return. But you can see off screen we can get that. So maybe if I went to the 87.50, 87, maybe I could squeeze a dime out of that. I would rather do this spread. And there you can see 7-cent bid offered at 13 cents. If the stock pulls back just a little bit to test that that candle right here, the last one, probably be able to get a dime for it. So I like selling that 87.50, 87 bullish put spread for a dime credit January 17th. I think that's a really nice trade. I'm expecting the stock to continue to move higher here now that it's broken through this little horizontal resistance and it's above the 100-day moving average, and that move came on good volume. So I like that one. Going to go with one other pick here, SHAK. Shake Shack, you can see 1, 2, 3, 4, 5 tests of this support level. We have a very firm base forming. Nice little rally in the stock today. Very, very strong support here. You can see that from the tails under body. So on any little pullback in the stock, and it does move, today the stock started out the day at $59. Right in here you can see that's kind of the level that I want to lean on. I think there's really nice strong support here, and you can see it does move around pretty well. So even a $1 pullback in this stock should get those options moving. Let's go back to the daily chart, and we're going to hover over the E. You can see that earnings are due on February 24th, so we got plenty of time to get a spread off in here. And we're going to go to the Jan 17s. And we're going to take a look at what premium we've got there. And again, we're interested in that $59.58 strike price. So here you can see a fairly wide bid-ask spread. If I click on that and I click on that, that would be selling the 59s, buying the 58.50s, a little closer to the money than I'd like to be. And you can see that the market on that spread, it's not showing one because that's a zero bid. Sell those for 85 and buy those for 85. But here you can see it's no bid offered at 30 cents. So very, very wide market. The middle would be 15 cents on it. So I'm going to go to the next strike. And I'm going to move it to there. And I'm going to click that. And so now you can see here we've got a zero bid offered at 25 cents. Still, I think there's a chance to get a dime for this. I would let the stock pull back a little bit. Try and distance yourself as much as possible. If you can go with the 58, 57.50, I like it even better. So there again, you've got zero bid offered at 20 cents. What's the middle? 10 cents. Get a little pullback in the stock. Should be able to get that done. So I like SHAK for a bullish put spread also. I feel the downside's pretty minimal on this stock because it's found such good support here. It's been basing. You can see that it's been a high flyer. It's just fallen down on a longer term basis. We can zoom out and see what the stock looks like on a longer term basis. A lot of support right in here. Okay, so I like that. I think this could be a really nice one. Just let time tick away. Should be a good spread. All right, so we'll go into the final one I like, MCD. MCD got this beautiful upward sloping trend line. That's what I want to lean on. It takes us to about the 196 level. Maybe the 195 strike price is something that we can use. We're going to have to go pretty close to the money. We've also got a very nice horizontal breakout right here on McDonald's. It should easily be able to get up to the 200-day moving average. I like this stock. It looks really good here. So I'm going to bring up the option chain. Let's see what we can get. We'll hover over the E. There you can see earnings on 129. So we've got time. I do actually have a January spread on this. It's been making money. You can see I'm short way down to the 195, 190 bullish put spread. Very nice. Working out in my favor. I'm going to open this up, which also is a nice feature on Option Stalker. When you open up all the option chains, it closes everything except for the position that you have on. So let's take a look and see what strikes we might have available to us. Again, that 195 level may be a little bit out of reach. Probably have to do a 197.50, 195. So if I click on that bid and I click on that ask, then I'll be able to see where the spread is currently trading. And off screen, you can see that roughly you'd be able to get about 40 cents off of the bid side here. So we need to get 50 cents for this. If I can get 50 cents for this spread, selling the 197.50 puts, buying the 195 puts, I think that is a nice spread. And in this particular case, We're right around the upward sloping part of this trend line here. You've also got a horizontal breakout right here around the 198.40 level. That really is going to be your first support. This opening from the day here, and you can see the opening price was 198. That 198 price should be very, very sticky. So I'm expecting that opening price to hold. 198 is still out of the money, so it can move around a little bit, but I think it's got some nice momentum here after a big compression. We had good volume today. Stock moved higher, closed on its high of the day. I like McDonald's. I think it continues to float higher. If I can sell that Jan 17, 197.50, 195 bullish put spread for 50 cents, I'm all over it. So I want to get everybody off to a good start this year. Happy New Year. We had a fantastic year last year. We're picking up right where we left off. I'm keeping my swing trades to a minimum. I think there's room to do some bullish put spreads right now. I am incidentally long some VXX, so that's a great way to hedge yourself. You can see VXX dropped right in here today because option premiums will continue to go down as the market goes up. But if the market hits a snag and we have some problems anywhere along the line, you're going to see option premiums explode, the VXX will move higher, and it will hedge any of our out-of-the-money bullish put spreads. So that's one way that you can hedge yourself. I'm about 90% cash right now, very few swing trades overnight. I'm waiting for that pullback. I'm going to be very patient. And I don't care if the market continues to float higher and grind higher and I look like a fool for the next week or two. I know that somewhere in here we're going to have a bit of market selling. We've got to have bullish speculators flushed out of the market. And we've seen some nasty days this year where we have 80-point S&P drops. It seems so unlikely right now. We've forgotten what it feels like to have an ugly day. But there's one brewing, and on a big pullback like that, I'll be waiting in the wings, ready to pounce on that opportunity. So I encourage you to be very, very patient in here. Don't try and force it early in the year. Let things come to us, and then we're going to be ready to reload. In the meantime, those are some really nice bullish put spreads. Those stocks, for the most part, are down on support. They're showing upward momentum. They're not overextended like the market is. So I think those support levels will hold and those bullish put spreads make sense. If you like this content, please give it a thumbs up. Please subscribe to my YouTube channel. When you subscribe and you turn on your notifications, you'll know instantly when I post one of these videos. They all have actionable trades in them, so you'll never miss a trade if you do that. If you'd like to subscribe to Option Stalker, please go to oneoption.com, spell it all out. I've got a trial that'll take you through the month of January with commissions included if you open an account with Trader Brokerage, and commissions are included after the trial if you decide to sign up for Option Stalker. Also have our research available for just $29 for the first month. We do sell it separately. It is included in Option Stalker. If you go to the research section of the homepage and click Learn More, you'll find out how you can get this for just $29 a month for your first month. Try it out. You've seen the trades every day that I post in YouTube. Love to have you aboard. We're finding great opportunities through the course of the day. Happy New Year. These are some good trades. Please take them. I think you're going to be happy you did. We'll see you tomorrow.